In this video, I want to talk about 3 stocks that if you invest into right now could potentially surpass your full-time income in the future, maybe even potentially or possibly the near to midterm future. And these are 3 stocks that have been recently upgraded by analysts and are looking extremely strong. And this is something I consistently do in the Discord, which is how we make the profits that you're seeing on the screen. Now my students have been able to generate 200, 300, even 400 or 500% returns in as little as 4 to 6 months by choosing these stocks and my trades, whether it be swing trades, monthly trades, or leap trades, or just investing into stocks. I have spent countless hours looking through the market, finding these companies, researching them so that you don't have to. Huge announcement before we get into today's video. My free masterclass webinar returns this Friday, September 26th, 6 p.m. Eastern, 3 p.m. Pacific. You don't want to miss it. Every student that's ever showed up to my webinar said they've learned more in the 1 hour they spent with me than anywhere else. Very limited spots remain. The link is in the information box below. Every webinar in the past, we have had hundreds and hundreds of students emailing us at the last minute trying to get in, and we are full. We have a very set number that we can let into the webinar. So if you want to be there, the link to get started is below. September 26th, this Friday, 6 p.m. Eastern, 3 p.m. Pacific. I'll be answering your questions. I have a huge announcement, and I'm going to show you why you're losing in the market and show you how to beat it and get better and grow your portfolio. I look forward to seeing you at this webinar. The number 3 pick in this list is Serve Robotics, and I've talked about Serve Robotics many times. They're expanding across the country. They're partnered with Uber Eats. They're in multiple cities, and these autonomous robots are performing deliveries that far exceed human deliveries. Let's take a dive into Serve Robotics and talk about why this is such a great investment. But remember, you want to be safe with your portfolio. You don't want to invest any more than 10% in any one position, and you want to make sure to be able to dollar cost average if the stock goes down, and don't load in too heavy. You always have to trade with caution. We can see Serve Robotics is sitting at the $13 range. It's had a lot of consolidation between 10 and 13. It spends most of its time between 10 and 12, 10 and 11. So right now it's at the top of my AVP, which is a strategy I teach in Discord along with my D-Stochastics RSI and my DFib, as well as the AVP and order and flow and volume footprint in the candlesticks. And right now it's building new support at 13. So particularly if I wanted to get into the stock, I would most likely want to sell put options at $11.50 to $12, maybe 2 to 3 weeks out or a month out. This way, if I get assigned, I'm getting in a little bit cheaper, but there's also running the risk of missing the move on this stock. But let's take a dive in to Serve Robotics and why this is a good investment. A notable surge in market activity has placed Serve Robotics firmly on multiple investors' watch lists with an average trading volume frequently exceeding 7 million shares. The autonomous delivery company has captured significant attention in a highly crowded market. This focus, however, has anchored a foundational strategical partnership with global logistics leader Uber Technologies, an alliance already translated into tangible growth and defining the company's path forward. The agreement to deploy up to 2,000 of Serve's sidewalk delivery robots on the Uber Eats platform is not a distant concept, but a commercial rollout is already in motion. This provides a concrete basis for evaluating the stock's potential and separates Serve from competitors still in their development, conceptual, or small-scale pilot phase. Inside Serve's deep alliance with Uber. To understand this investment case for Serve Robotics, investors should look beyond the simple client-vendor dynamic. Uber's partnership with Serve Robotics is deeply integrated partnership built on shared history and aligned financial interests. Serve Robotics began as the company's division of Postmates, which Uber later acquired. Serve Robotics began as the robotics division of Postmates, which Uber later acquired. This shared origin provides Serve with an ingrained understanding of the demands of a central delivery platform. More importantly, Uber remains a major institutional shareholder in Serve Robotics. This creates powerful strategic alignment where Uber is financially invested in Serve's long-term success, fostering a collaborative environment aimed at mutual growth. The partnership's ambition is reflected in its scale, an agreement to deploy up to 2,000 robots across multiple U.S. markets. For Uber, this provides a cost-effective zero-emissions solution for high-density urban delivery routes. For Serve, it offers immediate scaled demand and invaluable operational data. The plan in the executional stage and Serve's financial reports provide clear evidence that the partnership is generating significant operational momentum. Also, the rapid fleet growth. In the second quarter of 2025 alone, Serve deployed over 120 new third-generational robots, bringing its total fleet to over 400. This demonstrates an accelerating manufacturing and operational capacity to meet demands for the agreement. Surging delivery volume is also key as robots robots hit the streets, delivery volume increased by more than 78% compared to the previous quarter. This signals growing consumer adoption and increased utilization on the Uber Eats platform. We also have aggressive market expansion. The company has expanded beyond its initial markets, launching operations in Atlanta and announcing an upcoming entry into Chicago. This expansion has increased the company's reach fivefold since the start of the year, and the platform is now attracting other major brands, evidenced by new national partnership with Little Caesars. For investors, operational success is only meaningful when it translates into clear financial outlook. Robotics has provided a quantifiable target that directly connects the execution of Uber Eats platform to its future revenue potential. Management has guided for a projected annualized revenue run rate of $60 to $80 million. This financial target is explicitly contingent on full deployment and target utilization of the full 2,000 robot fleet, creating a direct link between the partnership's success and a significant revenue stream. Robotics is a stock right now that is slightly overvalued at its current price. You have to understand risks when you're investing, but long term, 1 to 2 to 3 years, this very well could be one of the biggest investments right now. It's very, very possible and somewhat likely due to the fact that Nvidia also backed them and they're partnered with Uber and they're picking up new contracts and expanding their fleet and growing revenue. And in the near to mid-term, there's a lot of growth potential on the table for Robotics. The number 2 stock in this list to look at to potentially add to your portfolio, I've talked about many times, is Navitas, NVTS. Their GaN, gallium nitride, and SiC, silicon carbide, are game-changing for 800-volt server chips and being able to efficiently cool servers and making their way across the broad spectrum of electronics, not just servers, into EVs, computers, any type of electronic. The architecture, especially with battery recharging, is game-changing and proprietary, and this is something to really think about. When I first called Navitas in the Discord, the stock was under $5. Now it's pushing $7 and was over $7 a few days ago. We already saw a 30 to 40% return in the past month alone on Navitas. And investing long term, it's potentially one of the best investments you can put your money into. Now, nothing's guaranteed. There's no such thing as 100%, but this company is looking very powerful, very strong, and they're partnered and backed by Nvidia. And this is something I've talked about many times. Anytime you have a problem, you need to have a solution. And in order to have a solution, you need to create or have problems. And overheating, voltage issues, and efficiency in server data with Nvidia is already apparent. And Navitas is potentially and almost surely the solution to this problem. Let's take a look at Navitas on the chart, because this is one of the best stocks to invest into, in my opinion, and based on technical analysis as well as a company evaluation. They're most recently upgraded. The only reason why it didn't make it to number 1 is, well, of course, you'll find out when you watch what number 1 is. But let's take a dive into Navitas. The stock has reached a most recent high of 733, which has peaked right up in its most recent resistance or ceiling level back at the beginning of August. Although it is finding new support right here, you can see based on these levels over here. If it can hold this new support level in the high 6s, then Navitas will likely try to break the next level, which is going to be 750 and then 850, 835, 840 range. And then the next level after that is 950. But right now it's in the middle of my AVP. My AVP is between 550 and 750, so it's pretty much almost smack dab in the middle of that. It's a buying opportunity right now. And if it drops, you want to be able to dollar cost average. You don't want to add too much to your portfolio at one time. You always want to exercise caution and risk when you invest in stocks. Also, key things to think about here is Navitas Semiconductor Q2 revenue of 14.5 million beats analyst expectations and raises 100 million, focusing on AI data centers and energy infrastructure. Navitas partners with PowerShip for lower cost GaN manufacturing. This is critical. A great chip, proprietary chip, much more advanced chips than anyone else, and they are partnering with someone to increase the low cost of the manufacturing, which is also very strong. The company also anticipates Q3 non-GAAP gross margin at 38.5% and project 2.6 billion market potential for GaN and SiC by 2030. They also have an AI focus and sharpen their focus in data centers and energy infrastructure, collaborating with Nvidia, and they co-raised 100 million through sales of shares to support growth in AI data centers and energy infrastructure. And their lower cost manufacturing partnership with PowerChip for its 8-inch GaN foundry aims to reduce costs and expand capacity. After looking at Robotics and Navitas, one might ask what stock could potentially be number one and be better than the other two. Well, we're going to get to that, but first I want to remind you that the free masterclass webinar returns this Friday, September 26, 6 p.m. Eastern, 3 p.m. Pacific. You don't want to miss it. Link to get registered is below. I'm going to show you what you're doing wrong in the market. It will blow your mind. Every student that's ever showed to the webinar in the past says they've learned more with me in an hour than they have anywhere else combined. And this is an ongoing thing. I have students that show up to every single webinar. If you guys want to be there, I'll be answering questions and showing you what you're doing wrong. Link to get started is below. And if you want to learn to make the profits like you're seeing on the screen, my students making tens of thousands of dollars, hundreds of thousands of dollars on single trades, including my student Xander, who went from 12,000 to 112,000 at this point in time. It was 106,000 when we did our most recent testimonial, but he's now up to like 112,000, 100 grand in his first month. Take a listen to what my student Xander had to say on my Discord and his growth. So today we are here with one of my newest students, Xander. How you doing, Xander?
Good.
Awesome. Glad to hear.
Yeah. So when I was watching other YouTubers, they were really pushing a certain mode of saying oh, you're going to make $1 million, over 500,000 with such a small account, and pushing so many numbers that just seems so unrealistic, where you seem to push a more focused strategy and actually explain stuff more to the point instead of just pushing the Discord. And it just made me pick yours over everyone else's. You didn't try and give unrealistic expectations, right? You actually gave a focused and clear strategy to how we'd make money.
Awesome. I'm glad to hear. And that is the goal.
I originally started with $12,000 when I joined your Discord. I never done options before that. And it's kind of crazy what I'm at now. From $12,000 just a month in your Discord, I'm at just over $104,000. So just unbelievable, life-changing money. It's just crazy.
Wow. So you went from 12,000 over 104,000 in 1 month in the Discord.
Yeah, just unbelievable. I couldn't believe it when I did around 9 trades, and just the amount of success that your trades were and so accurate. It was like 9 out of 9 trades, 104,000 from 12. I couldn't thank you more. It's just been awesome.
Awesome. That is amazing success. And in 1 month, that is like a 10x return, which is
1,000%. Yeah, over 1,000% I made in 1 month, just from your strategies and just from what you've put out in the Discord.
Based on what it cost you to join and what you've made and the group itself and just overall the education I provide, is it worth it?
Yeah, 100%. Yeah, people need to understand that your Discord community is insane. I made, in the span of a month, I made 12 new friends that have just been helping me and explaining to me trades that I haven't even thought about taking that were put out from you, and just explain the trades and give me an overall better understanding of how your Discord works. And if anybody's thinking of joining the Discord, 100% please go through those training modules. They're step by step, and obviously they'll learn at your pace. So if you can't do it some days, it's okay. But those training modules really gave me a baseline of how to actually do the options and how to take Corey's trades. And once I got to the module, I got through in the week. I just destroyed them all. I love learning. After that, I started to take trades, and it was just profits from there. Unbelievable. And I just couldn't thank Corey more.
So you heard what he had to say. If you want this to be your success story, you don't want to miss out on the webinar. Link to get registered is below. And if you want to just jump right into Discord so that I can show you how to tackle your growth, get started now, take action to live the life you deserve and you ultimately can achieve, the link is also below. I look forward to seeing you in the webinar. I look forward to seeing you in the Discord and helping you grow your portfolio and achieve your life goals. I will see you soon, fam. The number one stock in these top 3 stocks that could potentially surpass your full-time job at some point in the future, maybe even potentially mid to near future, is none other than APLD, Applied Digital. This stock gets the number 1 pick because they are introducing a very niche opportunity in server and AI. Every company from NVIDIA, AMD, Meta, Microsoft, everyone's going to need server data. Even Navitas, who's making GaN and SiC chipsets for batteries, recharging, and server efficiency and cooling, they're still going to need servers. And that's where Applied Digital comes in. Navitas and NVIDIA, great companies, but no matter how you look at it, they're going to need companies, especially Navitas and NVIDIA are great companies. So are AMD, Robotics, Tesla, Meta, all of them great. But even like the ones in this list, Navitas and Serve Robotics are going to need servers. In order to make servers better, a server needs to exist. Navitas is going to make servers far more efficient, but one must exist. And Applied Digital, like I said, has found themselves in a niche opportunity by renting out server space and has generated billions and billions of dollars already doing so, and has been recently upgraded from $8 to $24. The stock has shot up. We've made over 3x on Applied Digital in the Discord. I put that trade out on YouTube and Discord over the past few months. We've made so much money. It is just one of the many. Tempest AI, Snowflake, Meta, Oracle, Broadcom, and most recently, we also had Duolingo. We also had CoreWeave, JP Morgan, and many other stocks in the Discord. You can see those profits on the screen. We've printed so much. Some students have made 100,000, 40,000, 60,000 on one single trade. We're going to dive into why Applied Digital is so strong. You can see here that Applied Digital is all the way up high, almost like all-time highs. In fact, I believe this is actually all-time highs, just about, as it's breaking up into the higher range of the post-COVID run back in 2021. My AVP on this stock was in the $10 to $14 range, as you can see down here. Something I'll be going over in the webinar and something I teach in Discord. And you can see that it made new support. So my AVP is now between 13 and 17. The 13 to 17 range is the AVP. It now broke that. There's a lot of support at $24. You want to be careful when you invest in a stock like Applied Digital right now. You want to be able to dollar cost average on my 33-10 rule, which is no more than 10% of your account in one position. And you want to be able to dollar cost average 3 times, meaning 3% of your portfolio each time you dollar cost average. Because if you were to put money in this stock here and it was to drop down here, you want to be able to add here. And then if it runs or goes down more, add more. That will give you a center weighted average in here, which is much better. So you want to be safe. You want to be safe with your account and not go crazy. But this is a very strong investment based on analyst upgrades and ratings, and based on the price action, and based on the income that Applied Digital has been able to generate through contracts specifically and very recently. Shares of Applied Digital Corporation recently hit a 52-week high, which might scare some investors away, worried about buying at the top of the cycle or valuation limits. However, making a decision based on chart is often the wrong approach, as fundamentals are far more important now than ever. The technology sector is at a defining point in history, with valuations reaching new time highs nearly every week. Investors are torn between believing that this is the time that's different, or remembering that those are the most dangerous words in finance. While this time may not be different, some fundamental points suggest that the rally in technology isn't over. I say it's far from over. Case in point, Nvidia, one of the most controversial names due to its significant growth. On a simple valuation metric, the price to earnings growth, or PEG ratio, which gauges today's price relative to tomorrow's earnings growth, suggests that Nvidia is only fairly valued, far from being the bubble that some in the online space have been calling it. Applied Digital's stock rally is just the start, although calling a 67% quarterly rally the beginning seems bold. It seems justified, though. The main reason for its outperformance are its business model and current demand. Whether due to its momentum or more likely to its fundamentals, institutional buyers have started buying into Applied Digital stock recently, with further buying waves being set in the future. Hood River Capital Management was one of the most recent buyers with a 2.8% boost to its holdings as of mid-August 2025. This new allocation brought their net position to a high $220.1 million today, or 8.3% ownership in the entire company, which acts as a vote of confidence and confirmation of these future fundamentals being at play here. So you can see why Applied Digital is so strong. They're also renting out server space, the only one doing it. It's a niche in their area of expertise right now. It's where the company is growing. Billions of dollars have been generated already on contracts that don't expire for years and years and years down the road. So Applied Digital can keep doing what they're doing right now and keep expanding. They are on the cusp of generating success, and a lot of it over the coming years and decades, because of the fact they're doing something that nobody else is doing, and they have a solution to a very big problem that everybody is facing, including Nvidia. And this problem that everybody is facing is also going to affect Navitas. And Navitas is going to be able to make these servers more efficient and cooler. But having these said servers is also very important and much needed. And this is where Applied Digital shines. Hopefully you guys enjoyed this video. Don't forget, free masterclass webinar this Friday, September 26th, 6 p.m. Eastern, 3 p.m. Pacific. You don't want to miss it. Very limited spots. If you want to make the profits you're seeing on the screen right now and make tens of thousands of dollars per trade and get my trade alerts, you definitely don't want to miss the webinar or my Discord. The link to get started and register with the webinar is below. I look forward to seeing you there. One love. I'll see you on the next video, fam, and at the webinar this Friday.